let's move right along now. It's been a lot going on in the FX space and also precious metals. Gold prices dipped, but that's after a pretty astounding bounce we saw that looked pretty constructive on the charts. To go and get his views as to what that means longer term for the gold price potentially, Nick Twidale from FP Markets standing by here in the Sydney studio. Nick, good to see you.
You too. Welcome back to Sydney, mate.
Thank you, mate. It's good to be here. Gold. Can we talk about that to begin with? Because all the gold bugs were kind of walking around with their chest out, feeling a bit confident after what's been a pretty tough couple of years. What's the chart looking like at the moment when it comes to bullion?
Well, we saw some really nice breaks to the top side over the last few days, really, and that's really accelerated, and that came in with a lot of the dollar weakness across the board. But gold really took off, and it's taken off really nice. It's taken us out the ranges that we've seen recently. It looked really poor even a couple of months ago, and now it's just started to accelerate back to the top side. It's dipped off in line with a bit of dollar strength that we've seen overnight, and you know, I'll come around to this probably a bit later. CPI numbers coming up, that's what we're really going to focus on. But that's the longer term chart we got there, and you can see like a really nice break back up to the top side. Clearly a little bit of resistance coming in just below 1750, but yeah, nice moves and good volatility for the market. So the gold bugs be very, very happy with that move, and I suppose it's going to be down to that CPI number to see where we go next. All
right, let's go and have a chat about that, because that will go and help fill in the blanks when it comes to the currency market talk. What are your expectations around that? Because I get the sense that there's the view out there that if we see that the core inflation has gone and peaked on a year-on-year basis, that's going to be a signal to go and start taking on risk again, because it's going to likely see the Fed slowly start to pare back the size of rate hikes. But I kind of disagree with that. What's your take?
I tend to be in your camp. I don't think we're going to see that too soon. A lot will depend on what number we do see. But I think maybe we've started to get a little bit ahead of ourselves looking for that pivot from the Fed. I think it will come down to tonight's number, but let's not mess around. Inflation is still very high in the US, and the Fed has not changed its stance as much as a lot of people have wanted it to. And they are saying they're going to go and tackle inflation first. That means higher rates. And so unless we see, I think, quite a better number, or I suppose a poorer number in terms of inflation, then I don't think we're going to see much different from the Fed. And I think that's going to continue us on a bullish dollar move, which we've seen for so long. We do need something that's going to change and give us that pivot. I don't think we're going to see it this week. Yeah,
we're still looking at 0.5% month on month for the core. And I point out that that's more than 6% when you go and look at it and translate it to a year-on-year term.
Exactly.
I don't see how that's going to be bullish or risk assets. Just points to more tightening coming through from the Fed. Let's talk Aussie, because it was a real benefactor of those rumours that were circulating. It started about this time last week about China reopening or some form of reopening from a dynamic COVID zero, up above 65 cents. It wasn't too long ago, it was below 62. What can we expect from the Aussie from here? Is it just a play about risk appetite and sentiment towards China still?
I think it is. I think we've got the risk side of things and we've got the dollar side of things with the Aussie. I'm not totally believing what we're hearing out of China, that we're coming out of the doldrums. We sort of get conflicting news. It depends on who you're listening to.
Yep.
I don't think we're seeing that sort of zero tolerance policy changing anytime soon, and for that I think we see pressure on the Aussie, and that sort of ties in with what we've just been talking about with the dollar. I also feel we're still going to see a strong dollar coming through on the back of a still hawkish Fed. So to me, looking at those charts there, we're probably still, I'd be fading those moves towards that resistance that we've seen sort of coming in around 65. I think we could revisit the lows. Having said that, if those two things change, if we do see a resurgent China, which I don't think we will, and if we do see a far less hawkish Fed, which also I don't think we will see, then Aussie could take off, and Aussie would probably be one of the main currencies that we'd look to get long on in those conditions. Sadly for the Aussie battler, I don't see that happening anytime soon.
He is battling at the moment, Pacific peso of sorts, and it's a perfect, beautiful illustration of that chart of just to go and zoom out on occasions and try and just eliminate some of the noise, because it just explains so much of what's been happening over the past week or so. When tested that resistance line and has failed for the time being. So yeah, maybe go retest those lows that we saw in October. Let's kick off and finish the conversation with the euro, because it's got a bit of the same kind of mojo of what's going on with the Aussie. Yeah, exactly.
Exactly the same sort of. There's definitely something up there at 101, isn't there? You can see from that chart, like it tipped out at the end of October, and then 3 or 4 attempts up there. It's probably a decent bit of options interest.
Yeah.
Off the top of my head. And we're back around parity. I think from both charts as well, coming into that US CPI number, you've got some clear levels there that you can trade off of, which is quite nice for the currency, I suppose, punters out there. Yep. But also, you know, for anyone looking to do some real stuff, yes, down under sort of down towards 95. I think you'd probably be picking some up there because that's another 5 big figures away for us. 101 is clearly the level on the top side. So it will come down to that data for the currencies for the next few days. And then we've got to look at any political machinations we see around it, anything else we get on the news front. And news is coming thick and fast as well. I think, you know, you touched on crypto before. There's a lot going on in the market. So I think we're going to see more volatility. I'd be trading this range at the moment, so probably sort of, you know, 97.5 to 101, unless we get something that changes on the fundamentals or some big change. Then you're going to look for the break trades.
I asked you about a month or so ago whether we'd seen the highs for the other dollar index, and you said probably not, and did go to fresh highs. It's come with quite a pronounced amount, in part because of what's been going on with the euro and also some of that extreme volatility in the pound. I'll ask the same question again. Have we seen the highs?
I think I'm still going to go with no.
Right.
I think there's still a little bit more in it. I think the market's just had a little bit of a reprieve, which is nice. A little bit more difficult saying it when we've seen what we've seen over the last couple of months, but I've got to go with my gut instinct, I think, and what I'm seeing out there, and I think there's still more to come. I think the market really wants the Fed to turn, and I don't think they're going to turn for us before Christmas.